Very good evening, viewers. Today I am presenting one simple problem from hire purchase system where goods of substantial sales value purchased by a hire purchaser from the hire vendor on credit and payment is made in installment. Based on this hire purchase system, one simple problem I am going to explain. So here the problem is on your screen. Hire purchase system, and there are number of methods used for recording hire purchase transaction in the books of hire purchaser as well as in the books of hire vendor. So among them I have used the method for recording the hire purchase transaction is credit purchase with interest or sales method, or it is also called full cash price method, where the full value of asset is recorded. Because the problem is based on substantial sales value, that is the price of the goods is capital goods and having reasonably higher value. So starting with the problem, A Limited purchased a motor car from B Limited. So here A Limited is hire purchaser and B Limited is hire vendor, seller, on a hire purchase agreement on 1st January 2020, paying cash rupees 10,000, agreeing to pay 3 further installments of rupees 10,000. So it is a hire purchase transaction where goods is purchased on credit and payment is made in installment. So this is the problem based on annual installment every year, and there are 3 annual installment and which is payable on 31st December of every year. The cash price of the motor car is rupees 37,250, and B Limited charges interest at 5% per annum. A Limited writes off 10% depreciation every year on the cash value of the motor car, that is the cash price, the cost price of motor car, which is also called original cost, on the diminishing or reducing balance method. And what are the you have to prepare motor car account and B Limited account in the books of A Limited. So questions is very clear that under hire purchase agreement, goods is purchased on credit and payment is made in installment, and hire vendor charges certain rate of interest, or a fixed rate of interest is charged by hire vendor from the hire purchaser. So now hire purchaser is here A Limited, so here it is written in the books of A Limited hire purchaser. Okay, Now motor car for A Limited is an asset. So motor car account asset. So when motor car asset is purchased, so if you pass the journal entry, then motor car account debit to B Limited account. B Limited is the higher vendor because the transaction is purchased on credit and the cash price of the motor car is 37,250, and in motor car account we record only depreciation. This is the depreciation, and the rate of depreciation is given in the question is 10%. And now 37,250, 10% depreciation, it is 3,725. So by depreciation, and a depreciation is charged annually, and machinery is purchased on 1st January 2020 on the date 1st January. So at the end of the year on 31st December 2030, 31st December 2020, depreciation 10%. And this is the 37,250 debit side, credit side, and minus 3,725, the value you will get 33,525. So this is the closing balance of motor car at the end on 31st December 2020. And now the same value becomes an opening balance next year on 20 2021 January 1. So next day, that is the new year begins, and it is a two balance BD. Here it is a CD, it will be here BD, and this value will be brought down here. So 33,525. Again depreciation you have to charge for the second year depreciation. And in how many years we have to record in this way? So this is depends on number of installment. Since it is given in the question that installment is 3, so we have to record the 3-year depreciation. So here, so then 33,525 is the second year opening balance. On this balance again we have to charge the depreciation at the rate of 10%. So 3,352.5, that is, it is rounded off 3,353. It is made 3,353. Again now balancing the account. So here 33,525 and 33,525 minus depreciation value, so then the balance is 30,172. And now again similar the process repeat, that is two balance BD, but the next year this is the 2022, and this balance bring here brought down 30,172. And at the end of the third year, that is 2022 December 31st, again on this balance 10% depreciation, so 3017. So this is the depreciation of 1 year. So again then we have to balance the account totaling 30,172 and 30,172 minus 3,017, then we get the balance 27,155. So this is the closing balance on 31st December 2022. Since the installment are payable only 3 installments, so we have to record only for 3 years depreciation in the motor car. And just you write down the balance BD. Now it indicating that on January 1 2023 the balance of motor car is 27,155. So this is the hire purchaser has prepared motor car account, that is asset account, and in the assets account only on depreciation is recorded. In simple problem, depreciation. So it depends on number of installment. If there are 4 installment, then we have to record another 1 year more depreciation, that is the 4th year depreciation. Since in this problem only 3 installments are there, so you have to show the 3 years depreciation. So this years is depends on number of installment given in the question. Okay. So now thereafter, so this is the motor car account, as we have, it is given motor car account. Now you have to prepare the B limited account. So now you see in the books of A limited, that means buyer will prepare the seller account, then seller will prepare the buyer account. Now we are the hire purchaser, hire buyer, so we will prepare B limited account. Okay. Now see on the B limited account, hire vendor. So for B limited hire vendor, it is the creditor of A limited. B limited is the creditor of A limited because A limited has purchased a motor car on credit. So B limited balance you will find on credit side more than debit side every time, you see here. Now starting with this B limited here, in the motor car account we recorded B limited account debit side. Now in B limited account it will be motor car account, and the date will be the same, 2020 January 1. So 37,250. Okay. Now and down payment is made immediately. If you see in the calculator, so the total value of machinery motor car is 37,250, and the rate of interest is given in the question 5%, but under the hire purchase agreement generally buyer has to pay a certain amount or at the time of taking delivery, which is called down payment, and in this question the down payment is paid 10,000 rupees. So while calculating the interest at the end of the first year, we have to deduct the amount of down payment. So down payment is given in the question, it is a 10,000, so minus 10,000, and the balance is 27,250. On this 27,250 you have to calculate the rate of interest given 5%, the amount of interest, so into 5%, so it is coming 1362.5. So after the decimal you have seen that the 0.5 which is equal to 5 greater than 5, then preceding figure should be increased by 1, that is called rounding up. So here 1363 is made interest amount. So at the end of the period, at the end of the first year, this is on 31st December, interest becomes due, because hire purchase transaction, in hire purchase transaction, since the hire buyer is taking some times to pay the amount, and on this for delaying period hire vendor is charging certain amount of interest, and this is the 1363, and he has to pay this 1363. This amount is not included in the cash price of the motor car, which is 37,250. So this is the additional amount payable by the hire purchaser to the hire vendor because goods he has purchased on credit and payment is making in installment, so he is taking some period time for paying the amount, and for this higher vendor charge from him interest 1363 at the rate of 5%. Now this is the total amount 38,613, and this is the DP I have written. It is a down payment for your understanding, down payment. So it is, see, if you see in the question, it is given down payment 10,000 rupees, and apart from down payment, the installment, yearly installment is also 10,000. So this 10,000 including interest, and this 1363. Later on I will show you the working table. So how this 1633 and how this is amount is adjusted against the motor car in this 10,000. So simply 10,000 minus 1363. 1363 is the interest, and balance amount, which is 8,637, is paid towards cash price of motor car. Well, so this is the balancing of account 38,613, and deduct this 10,000, this 10,000, 20,000, then balance you will get 18,613 at the end on 31st December 2020. So if still amount due to B Limited by A Limited is 18,613, and now this CD will becomes BD in January 1. So next year 2021 January 1. So balance BD 18,613. And now again the second year interest on this balance you have to calculate what total amount due is 18,613. This 18,613. 18,613. On this balance you have to calculate 5% interest, and it is coming 930.65. So after decimal it is more than 5, so preceding figure you increase by 1, that is 931. So here 931 is taken. Alright, so then total it, then you have to pay the second installment. So second installment, the installment amount is fixed 10,000. So this is on 2021 December 31st to bank account. This is I have given 2, that means it is a second installment. This is the 2 second installment. For just for understanding purpose, this is the first installment at the end of the year, that is 31st December, and second installment 31st December, but year is changed 2021, and similarly third installment year is will be changed 2022. So in this way here the balance CD, and this one totaling is minus 10,000, so balance you will get 9,544, and this balance CD make it BD on January 1 2022. The amount payable to B Limited by A Limited is 9,544 at the beginning of the year 2022 January 1. Okay, now again on the 31st December, that is here December 31st, he will pay the interest. Now this is the last installment, so after that the no balance amount should be left, so both sides the amount must be closed. Now what we have to do now on this balance 9,544, 9,544 you have to calculate the interest into 5%. It is coming 477. Okay, but we have to make this amount, we have to make this interest amount in such a way that the last installment should be equal to 10,000. So if you calculate the 470, if you calculate the interest on 9,544, your interest is coming 477. But if you take the 477 here, it will be greater than 10,000. So we have to take the such amount after adding this interest amount, which will become equal to installment amount. That is, installment amount is 10,000. So if you write here 456, then when you total this 456 plus 9,544, it will become 10,000. So this is a little bit tricky at the end of the installment period, that where we cannot calculate the interest rate by applying the rate, we have to balance the amount, balancing of the account. That is, the interest amount is balanced, so that the amount will be added such amount that it will become equal to installment amount. Okay, so because after the final installment, after the third installment, there should be no amount remain to pay to be limited, and for this reason at the end of on the last installment period we generally do in this way. Okay, you added this 10,000 and here 10,000, and this is the third installment 10,000. So now you see that this side is 10,000 and here is also 10,000, so no amount left due to be limited by A Limited. It means that the whole amount due to B Limited is paid off by A Limited, and therefore there is no balance difference, both side is equal. Okay, so this is happening only on last installment. So in the last installments we balance, we have to calculate that much amount which make equal to third or equal to final installment. So here 9,544 is there. What amount should be added? It will become 10,000. That is the interest. If you add 456, then it will become 10,000. And now our final installment is also 10,000. So this is here. This is the last installment amount of interest is adjusted based on installment amount. Okay. So this is B Limited account. Now I will show you this. How calculation is done. Though I have already explained you in the problem, in solution here also, interest calculation. So and this is the table it is showing here. So this is here the table working note, calculation of interest amount. This is the cost price of motor car 37,250, and the down payment which is paid immediately 10,000. The balance is 27,250, and this 10,000 is considered that amount paid for motor car 10,000. Okay, out of 37,250, 10,000 amount is paid for motor car, and that is the down payment. Okay, and that will be called also installment here, but this installment does not include interest, otherwise we will not get the aggregate total amount 40,000, because the down payment is paid 10,000 and 3 installment 10,000. This is the 10,000 and 10,000, and this is the third installment 10,000. So 10,000 plus 10,000 plus 10,000 plus down payment 10,000. So total 40,000. So this is the 40,000. It is called higher purchase price, and this higher purchase price include interest plus cash price of motor car, that is 37,250 plus interest amount 2750. So 3 years we have paid interest. In the first year we paid 1363, in the second year we paid 931, and in the third year we have paid 456 interest amount. Okay, this is here. So now you see here the interest you add here 5% of this balance 27,250 you calculate, so 1363, and add with this, so it will become 28,613, 613 and minus the first installment, so 10,000. So balance left is 18,613. Again calculate the 5% rate of interest on this 18,613. You will get 931. So you add it again, deduct the second installment. So interest add installment less, interest add installment less. So then add interest here. This is the balanced. So to make equal to this 10,000, 9,544. Here you see the 10,000 minus 9,544, it is 456. So now if you add these two amount, you will get 10,000. So at the end of the installment period, third final installment, we adjust the interest amount, and the third installment 10,000. So 10,000 minus 10,000, balance is nil. So then you see, if you add this column 1 2 3 4 items, then you will get this 37,250. It is the cash price of the motor car, this one. And if you add this three amount, you will get 2,750, the total amount of interest paid in 3 years. And when you add this plus this, then you will get this 40,000. So this is the cash price of the motor car, this is the amount of interest, and this is the higher purchase price. Okay students, well, thank you very much. So this is the problem I had explained you. You all of you see, practice, listen properly. Thank you very much.